keep it going just as if I'm in here. Definitely, ask any questions or participate in the chat. Be greatly appreciated. And we're going to keep things going. So today, we're looking at our triangle defense. And what I want to do is recap kind of where we left off the other day. And then we're gonna keep on going, keep on going. Let me share my screen. All right. So you guys should be able to see my screen now. If you can't, give it 2 seconds and we should be there. All right. Now, let's take a look at some things here. So if you remember, we talked about our triangle defense being made up of two components. Number one, a strong area. Ooh, that's a cool little shortcut to sell. That was cool. I never did that before. What I do? So Shift S and Shift probably B. Dope. Shift S and Shift B. Pull up these shortcuts to, oh, there it is right there. Shortcuts to buying and selling. I didn't know there were shortcuts on here. That's good to know. So we talked about an established trend line, right? Established trend line being one of the things. But even before the established trend line, it's a strong area of supply or demand. Okay. Strong area of supply or demand. This is really the piece here. Now, I have a wonderful wife, and I remember one day I was talking to her about something that was taking place with with the students, and I said, "Babe, this is kind of what's happening." And she said, "Oh, so they're just out there trading V's, right?" And I was like, "That's actually kind of funny." And excuse me, but she was right. And what did she mean when she said trading V's? Well, what would happen is I would see, let's say, someone do this, right? Let's say they went ahead and they decided to do this. And they put a trap on like this. And then they did this, they put their trend line on, and then they pressed sell, right? When the market broke through that trend line. And what happened a lot of times is that the market, instead of doing what we wanted it to do, instead it ended up, coming down and then continuing up. And so this is what we meant by trading V's. Well, if we think about how the triangle works, is the triangle looks like this, right? Now, what she meant by trading V's is what's happening is you'll do your trap and you'll see the CJ come on and you'll do your thing, but you're missing the biggest piece to this. The biggest piece to this is the strong area of supply or demand. It's not the established trend line. It's not the CJ. It's not the impetus break. It is the strong area of supply and demand. And so without that strong area of supply or demand, you end up not getting the best result. So it's really important for us first to understand that we need a strong area of supply or demand. Once you have a strong area of supply or demand, the triangle defense will take care of itself. I promise you, if you are having trouble with our system and you have not yet got to the results that you want to get to, one of the first things you want to check is if you are trading from a strong area of supply or demand. This is one of the main reasons why people struggle with the system. When they struggle, it's because they're missing the most important piece. Go ahead, write in the chat for me. The most important piece to the triangle defense is the strong area of supply or demand. The most important piece to the triangle defense is the strong area of supply or demand. The most important piece of the triangle defense is the strong area of supply or demand. This is the most important piece. So we're not going to be out here just trading V's. Okay. Got to commit to that. I'm not just trading V's out here. I need to have a strong area. And so when you're about to take your trade, make sure the area that you're looking for is strong. Okay. Very, very important. I mentioned in a class earlier today that I was looking to take a buy off of this area, but I happened to not be around when my trade came. Well, what I used was the triangle defense, but what I also had was a strong area. And so I had this marked up as my strong area here. And I was waiting for the market to get there. I hadn't quite got there and it pulled back while I was waiting. But then when that strong area happened, when the market got here, this was where everything worked. This is why it bought up, not because of anything special other than the market finally reached the strong area of supply or demand. And so again, this is typically the first reason why we struggle with our results. Okay. One of the first reasons is not having the strong area of supply or demand. Okay. Very, very important. Okay, very, very important to have that strong area of supply or demand. So whenever you're doing your triangles, please, 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 please first start. And we're going to talk about workflow, but ultimately, if you're entering a trade, there's really nothing to do until the market reaches a strong area of supply or demand. We're going to talk about that workflow again later, but save that. There's really nothing to do as far as entering a trade until it's time that you've reached an area strong, a strong area of supply or demand. There's really nothing for us to do here. Okay. Now, established trend line. Okay. That established trend line, recapping it, is going to be here. Now, if you remember, we talked about, and if I remember actually, but I'm sure we talked about trend lines and how they're formed, right? On a downtrend, we have lower lows and lower highs. On an uptrend, we have higher highs and higher lows. And in a downtrend, it's the lows that matter, the highs that matter, right? It's the highs that matter. And so if I didn't say it, I apologize. If I did say it, I apologize. What I'm saying is, um, I don't remember is why I'm apologizing. I don't remember if I said it or not. Okay. But I'm going to say it right now. So I'm apologizing. Like, we already heard this, Chuck. Well, we already heard it. Perfect. This will be a refresher. But I honestly, I do not even remember if I said this piece. I'm assuming that I did, but I didn't get a chance to review my notes yet. So here we go. The way this works here with the established trend line, right, is you just need to make sure that all of your highs that are within the trend are within your area, okay? So for instance, here's a high, and here's a high. Well, all of my highs need to be on the left side, right, within the triangle. And so this high wouldn't work, and this high, I'm sure I did do this, but I'm not positive. I'm sure, but not positive. Contradictory statement. All right, I'm almost sure. Here we go. High and high, right? See, these two highs are on the inside, are on not on the inside of our triangle. This one is. So this wouldn't work. This is my rule for drawing the triangle, right? These two highs, right? If we connected it here and here, this could work. But also, if I connected this to this, all this would work too. Okay, so we can see both of these are workable scenarios, right? The question is which one? I actually like this one better. This one I like a lot better, right? But all three of my highs are inside of my triangle, and so we're good here, okay? Over here on the left, if I was drawing a triangle, right, this would be acceptable because every single low is on the inside of my triangle. It's on the left side. Inside just means left side of the triangle, okay? So that's how that works. Now, I know I said this, right? You have the hypotenuse, you have the base, and you have the height of the triangle. Okay, so we have our height here. We got our base right here and our hypotenuse right here. So that's the hypotenuse side. Here's our base side. Okay, so go ahead and label all these base, our height, and our hypotenuse. Okay, there we go. So these are the different sides that we have. Now, um, what's happening here is, if you guys remember, the triangle defense is a price trap. Okay, it's a price trap. And what we're doing is we're boxing price in, and we wanted to eventually hit a wall, our base, and break out of the trend line side, the hypotenuse. We wanted to break out. Okay. Now, it's really a three-step process to confirm that price direction has changed. And there's a three-step process that I want to remind you of and introduce to others. Okay. The very first thing that we're trying to accomplish is we're trying to have a respect of horizontal structure. Okay. And that's our baseline. And that's why the strong area supply or demand matters. Eventually, you're going to really begin to understand that the market doesn't care about anything else other than, right, its areas or its levels or its prices. Okay? Doesn't care about our double bottoms, our double tops, doesn't care about our CJ entry, doesn't care about our impetus breaks, doesn't care about head and shoulder patterns, right? Doesn't care about any of those things. Excuse me, consistently, time and time and time again, all the market shows us is that it cares about its prices. Okay. And so the thing that we're waiting for is for the market to reach a price it cares about. Okay. And when it does, it's going to respect that level. And so it's the respect of a horizontal structure that we're looking for. The next thing that we're looking for is the disrespect of diagonal structure. What is the diagonal structure? Well, the diagonal structure is our trend line right here. So we want to disrespect this diagonal structure. Okay. Disrespect means that we break through it. Okay. Respect is that we don't break through things. So we want to disrespect our diagonal structure. And then we want to do one more thing to confirm that we're done. Disrespect of horizontal structure. Okay. Now let's define this a little bit more. So horizontal structure, this is going to be supply or demand. Okay. This right here is going to be our trend line. Computer, we are waiting for you. There we go. Diagonal structure being our trend line. Okay. And then our horizontal structure, finally, what we call, come on, computer, we are waiting for you. Sorry, my computer's like, Chuck, you're asking for a lot right now. I probably need to stop sharing my screen on the, give me 2 seconds. It doesn't like that I'm doing a screen share. Let's, I'm trying to come off of it. There we go. All right, almost there, guys. Just letting it chill out. I think we're good. Let's see. Yeah, there we go. All right. Disrespect of our horizontal structure being our empathy. Yeah, we're good now. My computer did not like that. Okay, perfect. So what's happening here, impetus, and we're going to get more into impetus later. What an impetus level is it's a structural level, right? It's an important area for us to understand when the market is changing structure. We're going to get into this more, but this is one of the things that you really want to remember. The respect of the horizontal structure, then the disrespect of the diagonal structure, then the disrespect of the horizontal structure is really your formula for understanding when price is changing directions. And again, we'll get into this more as we continue in this series. But for now, that's the formula. So look here. When the market hit here, this is a respect of our horizontal structure, our supply or demand zone, which is our base. Right here, when we broke through here, this is a disrespect of our diagonal structure. And then right here, as we moved up, this is a disrespect of our impetus level. This would be our impetus level right in here. And so this is another horizontal structure that you would like to break. And this lets us know that the market has changed directions. Again, we're going to come back to this in more detail in a second, but this is how this would work. Okay. Now, let's talk about how we actually draw our triangle defense because there's something called the correct time frame. The correct time frame. Okay. The correct time frame. Now, the correct time frame, we find the correct time frame to actually view our triangle very simply by utilizing our first pillar, trend direction, and we leverage the 20 and 50 relationship. Now, I need to remind you what the 20 and 50 relationship is all about. So let's do this. When our 20 is above the 50, we are dealing with an uptrend. When the 20 is below the 50, we are dealing with a downtrend. Okay. And so we utilize this cross to let us know when the markets are changing directions. Okay. Now, check this out. Let's pull on our 2 seconds. Our ORS trend direction indicator. Now, if we look at this, my blue line is the 20. My red line is the 50. Okay, my blue line is the 20. My red line is the 50. Okay. So what we have in here, okay, this right here is the 20. When the 20 is below the 50, the blue below the red, we're selling. And as you can see, right, price is just moving down. When the 20 is above the 50, we're buying. And as you can see, price is overall just moving up. Okay. Now, here's what we do. Remember, the triangle defense is designed to trap a trend. And so every trend has a beginning and every trend has an ending. Okay. So how do we know something's trending? Because it's making higher highs and higher lows. Okay. Or lower lows and lower highs. So for instance, over here, we can see that the market is making higher highs and higher lows, right? So we know that this is trending. Okay. And guess what? Because it's trending, we're able to trap it. Now, here's what you want to do. You want to use your 20 and your 50. And remember, we're trying to find the correct time frame. Okay, so how do we find it? Well, we identify the beginning, where the trend began. So we identify the beginning of the trend. Okay, so where did the trend begin? Well, an uptrend, right? It's going to begin at support. Here's our support level. Okay, I like to make a vertical line here to show where the trend began. Now, from the time that the trend began, right, what we're looking for is for our 20 and our 50 to cross each other. Now, here's the way this works. Once we've identified the beginning of the trend, we need to look for the 20 to cross the 50 in the direction of the trend. Okay? So here's the rule. We want to see one cross of the 20 and 50 in the direction of the cross and no other crosses in the direction of the trend. Sorry, that's direction of the trend, not the cross. Dang, sorry. In the direction of the trend and no other crosses. So let's figure this out. So one cross of the 20 and the 50 in the direction of the trend and no other crosses in the direction of of the trend. Now, in the direction of the trend. Okay, this is rule number one. So in order to find it, we find the beginning, and now we need the 20 to cross in the direction of the trend. Now, What's the direction of the trend? Well, the trend is going up. Price action is moving up. So that means, if you remember, when markets are bullish, we need the 20 above the 50. When markets are bearish, we need the 20 below. So right here, we can see that the 20 is above the 50. Okay. So that's rule number one. One cross in the direction of the trend and no other crosses. Rule number two. Okay, rule number two. Rule number one cross in the direction of the trend and no other crosses. Rule number two is going to be find the lowest time frame, right, that fits rule number one. Okay, find the lowest time frame that fits rule number one. So for instance, the 20 crossed the 50 up, so this is good. But now we need to see if we can find a lower time frame that fits number one. All right, look, 20 crossed above the 50 up. This still fits number one. This is good. Is there another time frame that works? Okay, as we go down to the 5 minute, notice we have more candles and we have more moving average length, right? So we can see 20 crossed up above the 50 here. Let's go down further. Here's our 3 minute, 20 crossed up above the 50 and no other crosses. That's good. What about 2 minutes? 2 minutes, one cross up, potentially a cross right here, right? It's looking like it might have crossed right there. So because of that cross, and it did, because of that cross, we now know we went down too low. I'm going to go down even lower so you can see what I mean by too low. So look, from the start of the trend, we have one cross in the direction, two crosses in the direction, three crosses in the direction, and four crosses in the direction. Now, this is not to be confused with crosses that are not in the direction. So this is very important. Very important note. Pro tip here. Make sure you write this down. We do not care about crosses that are opposite of the direction. Those we do not care about and we do not count. Okay? We do not count crosses in the opposite direction. So right here, this is a cross in the opposite direction, not a part of my account. So remember what I did here. One, not a part of my account. This is down. Two, is in the direction, a part of my account. Three, not a part of my account. I don't care. So this is three. Three right here. Four, not a part of my account because it went down. Four, right? So I have one, two, three, four in the direction of my trend, okay? Let me know that you understand that in the chat. Chuck, I get the whole crossing in the direction of the trend thing. Make sure you don't just say yes or no because I won't know what that yes or no means. Okay, so one cross in the direction of the trend, you can say, yes, I understand. Okay. We don't count crosses in the opposite of direction of the trend. Okay. That doesn't matter. Some people get that confused and they like, oh man, I was counting. I thought it was multiple crosses. Like, nope, nope, nope. We don't care about those. We only care about crosses in the direction of the trend. That's all we care about. Okay. I'm belaboring this point because it's very important. Okay? Very important. So that won't work because four is too many. We only wanted one. And this won't work because we have one cross and we have a cross here for two. It's a little baby cross, but it is a cross. So what we're going to do is we're going to go right here. Okay? This is our time frame. So you want to go to the lowest time frame that doesn't impact or affect or break rule number one. Okay, the lowest time frame that doesn't break rule number one. Okay, there you go. So this is our correct time frame. Excuse me, the 3 minute. Now, what's the big deal about having the correct time frame? Well, the big deal about having the correct time frame is the correct time frame allows us to leverage our pillars correctly. Point blank, period. Okay. That's the reason. Someone asked me like, man, all this changing the time frames, does it even matter? Yes, it does. It does. It matters because the pillars operate differently on different time frames, and it's important to adapt the pillars to the way that the market is moving and the structure. Let me say it again. There are a lot of approaches to the market, but one of the things that I love about ORS is it's flexible. It's flexible because it's not time frame dependent. This is why no matter what time frames you like to trade on, or you like to your trading personality, if you're a scalper, or intraday, or swing, or position, day trade, whatever you are, it doesn't matter. It does not matter because we're able to leverage, right, this system and adapt it to whatever time frames you care about. Okay. And we can also adapt the structure. This is why ORS works basically year round. Some strategies don't work in certain moments because they're not flexible, they're not adaptable. That's the cool thing about this. Okay. Now, why also does the lower time frame matter? Well, the lowest time frame matters for speed because one of the things that happens with with indicators whenever you use them, they they are known for having a lag. Okay, a lag. And what do we mean by a lag? Well, what we mean is they tell us what price has done typically because they're operating typically off of closed information. When I say typically, saying that most of them are discerning or interpreting what the market has been doing, right? Not necessarily what the market is going to do. Now, when you get good at them, which I try to help you guys get good at them, we can actually get in front of what price will do based upon what we've read and how it's done it. So there's nothing wrong with lag. You as a technical trader trade with lag all the time because you're looking to leverage what the past has done. That past information is giving you information about what can potentially happen in the future. So lagging is, I know people say indicators lag. Yeah, they do. They do. But lagging is not a problem necessarily. Old information can inform your new decisions. And that's totally fine. Okay. Don't have to worry about that. But also, here's the thing. We overcome the lag and show up right on time for us by adapting our indicators to the way that structure is moving. And so for us, we can be here right on time because we have the ability to be versatile in the time frames that we're looking at. Okay. So if you want to stay stuck, right? I've seen ORS traders resist me on the changing the time frames and stuff like that. I mean, you can do it if you want, but that changing the time frames is, it really is uh, like it's important, right? Don't get stuck on your time frame, right? Your favorite time frame, market doesn't care about it, right? Like I said, it just cares about its prices. So if you wanna adapt, right? If you want to be able to flow, you got to be able to adapt, right? So, um, this is one of the reasons. So it allows us to overcome the lag, right? It allows us to be more speedy in our decision making. What else does it do? Well, it also allows us to see the details of structure. Okay. It allows us to see the details of structure. So we can see here, originally, I think I was on the 15 minute. Okay. On this 15 minute, we couldn't see the same details. And especially if I was to go up to the 1 hour chart, we definitely cannot see the details of this trend. right? All we see mostly is a bunch of candles and, this is moving up. But just like in here, we can see a bunch of candles and they're moving down. But when we go down to lower time frames, we're able to break up this, right? So think about these are 1 hour candles. If I was to go to the 15-minute, what happens? Well, these 1 hour candles get chopped into four, and each of these are four different candles, right? If I was to go down to the 5-minute, then what's going to happen? Well, we're chopping that candle down even more. We're chopping that candle into 12, right? 12 candles are inside of this one candle, okay? So by the time we went down to three, right? I'm not trying to do the math on this, but I guess I will. If we dropped it down to six, that'd be 10. So if we dropped it down to three, then that's 20 candles. 20 candles are inside of this whole thing of each one of those 1 hour candles. Okay. I think I did that right. 20 times 3 is 60. Yeah. 20 candles, right? Inside of each of the hours. Okay. So now we're able to see more of the details. Okay. And that's what this is all about. Okay. So someone asked me, why do we have to change time frames? So you can see the details. So you can look at the details because this is showing us different information. Like now that I'm on this time frame, I can see a lot of details, right? Like now that I'm here, you know what I care about? I care about this right here. Why do I care about this? Let's get this guy off right quick. Why do I care about this? I care about this because this is an area of supply. I wouldn't have known that by being on the 1 hour chart. I wouldn't have known that. I would have no idea that a supply zone is sitting right here on the 1 hour. I can't see that detail, right? No way could I see that, right? I also can't see that a supply zone is right here. I can't see this detail or right here. These are areas that I can't see. I can't see this demand zone right here. If I'm on that 1 hour candle, right, there's nothing, I don't know, right? I don't know. Those just look like big old candles, right? There's no way I would know that. So the cool thing about changing time frames is now you're able to see the details, right? So knowing that, look what it just did. I can see the price action, right? I can see these opportunities in a way that I would not be able to see if I had only stayed on that 1 hour. I want to show you something. Okay, look in here. Notice how this supply zone that I told you got broken and retested. This zone got broken and retested, right? You can see that. So there's an advantage, right? There's an advantage to being able to see it. Also, what do I know? Why I know right here when this candle closed right here, it tells me that this market is currently moving down, right? When this market closed right here, it tells me that it's moving down. How do I know? Because I can see the details, right? On the 1 hour, it would not look the same. You would see a white candle, but you wouldn't be able to know the way that we know, right? Based upon just that information, right? It allows us to see the details. You can see we just moved all the way down. Well, our triangle defense puts us on the right time frame to see the details. Put that in the chat. Our triangle defense correct time frame allows us to see the details. Or you could say the correct time frame of the triangle defense allows us to see the details. Whatever you want to do, right? You guys know I'm not always focused on grammar. I'm always focused on the point. All right. So the details matter, you guys. The details matter, right? So also we were able to eliminate that lag, as I said. So now, like, I could, right here, I could have made a decision in the middle of an hour candle here, right? Right here, based on the things that I know, I could have made a decision right in here to be a part of this while that hour candle was still forming. Okay. That's the advantage of dropping down and showing the different time frames. Okay. So I'll show one more example and then we'll call it a morning or a day for some of you guys. Okay. Let's look. Mhm. My computer is like, Chuck, we are done with you, bro. All right, so we focused on the uptrend. Let's look at the downtrend version. Okay. So here we are. We're going to identify the beginning of the trend, which is right here. Here's the beginning of my trend. Let's go ahead and put a trend line on. Now this is good because this is not as textbook. Now let's bring on our thing. So the question is, from the point where the trend began, we want to see one cross and no other crosses, right? In the direction of the trend. So we only see one cross in the direction of the trend. Okay, this looks good. Now we want to make sure we're on the lowest time frame. So the 20 is below the 50, that's in the direction of the trend. So let's come here. Okay, here we go. So here we are. Notice that there's a cross right up, but this isn't in the direction of the trend. We don't count crosses that aren't in the direction of the trend. Okay, here's a cross down. That looks good in the direction of the trend. And then right here, it basically kissed. Let's see if it crossed. Nope, not a cross, just a kiss. Okay, so it didn't cross, which is fine. So guess what we found? Probably the correct time frame. How do you know? We'll go down and see if it still works, right? Keep coming down. And what we can see here is we can see one cross down, one cross up, one cross down, one cross up. So one cross down, three. That's three crosses down, four crosses down, and five crosses down. That will not work. So we have too many crosses down. So we're going to come back up. I skipped the 20-minute, but we can already see, we can check the 20-minute. Now, here's the thing, guys. You guys don't have to go 30, 29, 28, 27, 26. Some of you guys have taken this to the extreme, okay? And what I will say is I get it, right? Because that's what I taught, right? I taught you guys to find the correct time frame. But one of the things that I want you guys to notice is notice when you do something different than what I do, right? So this is one of those things where I put up my time frames all the time, right? You guys see it in almost every class. I'm going through these time frames. But you guys don't see that you guys can look right here. I don't have every time frame known to man right here, right? I don't because for me, I'm dealing with those intervals, right? I'm leaving a certain amount of space. So, I kind of only have the most important. So you can see right here, I have the one, the two, the three, the four, the five. I don't have seven, eight, and nine, right? Because it's just a little bit of a weird interval, right? Five makes sense. Four, things divided into four a lot. Three, two, what? That makes sense. 10 makes sense, right? Denominations of 10, 15, 20, 30, right? Even 45, right? But you see, I don't have 33. I don't got 37. I don't have 44, right? It's just not really the most popular. You get what I'm trying to say? So I got 20, 30, 45, 75, 90. Got 1, 2, 3, 4. I guess I could have 5, but I'm thinking about 24 hours, right? And I have 6 hours, 8 hours, 10, 12, and I did put 15 in here, right? So you can have whatever you want is the point, but don't feel like you have to have every single time frame known to man. You don't have to be so precise all the time. You can have 8 if you want, but you can also just go to 10, okay? So I just want you guys to know that. So 20 doesn't work. We could see cross down, down twice, down, right? So too many times. 30 was our time frame, okay? So this is our correct time frame. How would I draw my trend line, right? I would draw my trend line like this, where all of my highs are inside of the triangle, okay? Just like that. All of my highs are inside the triangle. So there we go, ladies and gentlemen, okay? That is our triangle defense in the correct time frame. In our next session, we'll get into this some more. And I'm excited to continue to perfect this and get you guys there for today's session. All right. No pip rally this weekend. Great job, groups, on your pip rally. Shout out to the Level Up crew, right? Shout out to you guys. You guys had a wonderful presentation. All right. No, it was a round table. Sorry, the round table. Shout out to the round table. Excuse me, round table. Don't beat me up. And I'll see you guys next time. Um, loving you the whole time. And you guys be blessed. Peace, fam.